On the last trading session Friday, gold spot printed a closing price a little above $1,898 per ounce. The numbers rounded. The market is closed, and on the last week, gold traded as low as $1,849 per ounce and as high as $1,916 per ounce. The numbers rounded, and the market is closed. Gold is trading in a bullish trend. We are above the 100 days, 200 days daily simple moving averages, but below the 20 days and the 50 days daily simple moving averages. RSI readings are moderate on the daily and the weekly chart, but still overbought on the monthly chart. Supports are seen at $1,889 per ounce, then 1,874, then 1,848. These are spot rates, and the resistance are seen at 1,917, then 1,925, then 1,945. We'll move on now to the calendar. On the economic calendar for the coming week from the United States, we're waiting for so many economic headers to be released. The services PMI and the ISM non-manufacturing PMI, they are due to be released on Monday. Then the exports, imports, and the trade balance on Tuesday. And on Wednesday, we'll get the FOMC statement and FOMC meeting minutes. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again. We are heading into one of the most challenging and confusing weeks for trading gold and other precious metals. Technically, gold did not bottom yet, and if you will reflect a little bit on the cycle duration, you'll see that gold is still poised to put a bottom around $1,750 per ounce spot rate. This is a highly possible scenario from a technical standpoint. On the other hand, if you will look at the fundamentals, we do have a different narrative because of the latest updates about Trump's health, as he announced that he is infected with the coronavirus, and we got also the stimulus bill, which was also accelerated, or there is some positive acceleration happening after Trump announced that he got the coronavirus, and we got also reports from around the world that we might be heading into a second lockdown. This is very confusing fundamentals, by the way. Something advise you to stay away from the market, and something else advise you to be involved in the market. The trade is that you got to get rid of the cash that you have on hand and move into real physical assets. I'm talking here about precious metals, gold and silver and platinum, and I'm talking about stocks. Move into assets that does have the opportunity to appreciate in the value over the course of the time. This sort of transaction is influenced or forced on the markets by the central banks, and on top of them, the Federal Reserve Bank of the United States, because they have printed so much money. They are doing quantitative easing, and they are doing similar things to the quantitative easing, like the stimulus, fiscal stimulus, which all is going to increase the supply of the fiat currency and make the purchasing power of these fiat currency less over the course of the time. So what we are having right now at the markets is just the market is afraid maybe of the outcome of the U.S. presidential elections. They are afraid about what's going to happen to Donald Trump. Is he going to recover from this virus infection or no? So they are going to a little bit trim their positions, and you're going to take advantage of this by buying if in case gold dropped below 1,800. That's all for this week. Thank you guys for watching. I'll see you next week in another video.